Let's continue on the theme of where there has been growth in the industry to specifically talk about fund finance. It's grown from a few hundred million to well over $1 trillion business. And then by 2030, the expectation it'll be $2.5 trillion. Where's PitchBook been playing a role in the fund finance industry, and what's your response to this growth?
So if you go back to PitchBook's founding roots when John Gabbert started the business, he worked on the venture side at a venture data provider. And the questions they were starting to get were, we need more information on private equity because the private equity groups are starting to spend a lot more time in the lower mid-market. They're spending a lot more time trying to be acquisitive in the venture space. And in general, the funds are getting bigger. And so they're doing more interesting things. And so one of the things I like about our industry is that private markets tend to be a bit ahead of the curve of everything else you see by the time it hits CNBC by a matter of 2, 3, 4, if not more years. So I feel like we've been positioned to kind of see what's coming next and try to position the business accordingly. And what we always kind of find is there's a kind of this halo effect of other things start to show up as net benefits related to that core asset class or that core customer segment you're trying to grow. And as long as we build extensible products, we can serve a lot of different customers. And I look at that today with credit. We did an acquisition of leverage commentary and data. We're starting to see a lot more private credit firms show up in our funnels. And they were just using us for fundraising data. We're just using us for performance measurement data. So at that point, when we did that acquisition, now we can serve their deal use cases, and we got kind of the same halo effect. And so I'd like to think that we position ourselves for kind of the next trends. And I'd say the one we're positioning for right now is we feel like you monitoring what's in the ground and understanding how your portfolio is truly performing and where you have trouble is something that's more important in this risk and rate environment than it was 3 or 4 years ago. And then we also think there's an ability for credits to trade hands at a faster clip, even in the private credit space. And so we acquired a business that was literally 2 years old, that was doing nothing but private credit portfolio monitoring, helping folks understand what's in the ground. And then lo and behold, that product started to extend into private equity. I think it's kind of this rinse and repeat of position for the next thing, recognize where the halo effects come in, make sure you build products that are extensible. I think that's kind of the journey that we've taken over the last 18 years.